morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, April 24th. What another wild day in the marketplace. And if you looked at the numbers, Dow Jones flat, literally zero. NASDAQ up 21, S&P up 3, and Russell down 2. You would say, oh, it's not a big deal. But if you look in front of the screen right here, we had immediate sell-off right out of the gate. We were up about 7.5 handles in the E-mini S&P. We literally sold right off to bounce back at near the highs, sell off again, lower high from the previous high, sold off again at 2 o'clock and bounced into the close, basically just limping into the close. Terrible, terrible price action. And this is what we're seeing here. Look at this. Just absolutely crazy. Look at this price action. Then you go down, you look at this area here, consolidation, another sell-off. I mean, it's just absolutely insane. This is why I say take a step back, watch the volatility, and you know what? I noticed from when Apple's news, and I said it yesterday in the video. I said yesterday, you know, one stock I just can't imagine it's going to rally all of Asia and Europe without somebody coming in and selling the stock, selling the market. And that's exactly what happened. I was totally leery about this, and I've got a bunch of emails. Oh, you know, I'm getting whipped around. What do you think I should do? Take a step back. Cash is a position. This is not trading. This is just killer movements that is going to be detrimental to your trading account. I mean, you could literally, and I want to go to this important video today, guys. I want you to look at Goldman Sachs. Okay? Sold off from the highs. Let's take a look at some of the high flyers. LinkedIn. Down on the day. Look at this from the high low, down on the day. Let's take a look at BIDU, Baidu. Down on the day. Boom, sold right off and then just limped into the close. How about Google? One of our favorite names. Down on the day. How about Netflix? Now Netflix, most importantly, had earnings. Oh, excuse me. Let me just get this out. NFLX. Okay, look at Netflix. 380 just alone on Tuesday. Look at this sell-off down on the day. Terrible, terrible price action. And I emphasize this because I don't want anybody getting killed out here. This is the problem that we have. I've had a few through the Squawk Boxes and people that I know, oh, I'm just going to go out and buy, buy an inverse and I'm going to get long because Apple's going to save the day. Well, guess what? That's what the markets want you to do. They want you to fool you. They are made to fool the masses, guys. Please do not get fooled. This is why I'm saying, this is why we put these videos out. Now listen, we all get fooled in between and we all get stopped at. That's part of the game. But to get involved with something like this intraday, and you know what? It almost got me to us. You know what I'm going to buy? Maybe I should look in maybe get long somewhere in it. You would have got stopped out immediately. And then you would have took this long and got stopped out again. And at the time, now what are you going to have here? You're going to be limping into the close. Be fresh and be ready and be nimble for the next move because I do think the next move is going to be lower. Now, remember, it's only a theory right now, meaning that based on my analysis and what the charts are telling me, I think that the markets are headed lower. That does not mean that we can't get followed through to tomorrow because we can. Amazon came out with earnings. They supposedly beat. But let's talk about that for a minute. Amazon's earnings, Apple, and Apple's a little different because they have a 7-for-1 split. They're buying back shares, yada, yada, yada. They had to do that because they have no innovation. They have no product. There's nothing going on with Apple. And that's the reason why they had to do that to buoyancy the stock. Otherwise, that stock would have been down $60 today, and this market would have been down big time. Okay, but that doesn't mean that the markets can't start to sell off again. As you can see, there's willing and able sellers at these levels. Now, that does not mean, again, that we are going to crash tomorrow. Please don't don't take it the wrong way. It has nothing to do with that. All I'm saying is I think risk is to the downside. I think that, yeah, we could follow through tomorrow, maybe Monday. But if you have all of the cards lined up and they're starting to line up, meaning that I think that we're going to see some downside pressure. We have perfect seasonality trends are lower from April to the end of June. Okay, we also have mid-year elections. I mentioned 10 out of 16 were negative, down 10%. 10 out of 16 election years, mid-election years. Okay, history is on the side of we seeing further downside prices. Okay, now remember again, I'm not trying to get everybody hyped up to short the market. That's not what we do here. We look for spots, and if the market gives us the price action tells us to move lower, then we shall move lower and we shall start selling stocks. I mentioned that in the ES, I believe it was like 1860-ish. It blew right through it. Did I short? Of course not. You have to wait for that trigger. You need a trigger based on your trading plan, not because the market is at these levels and it's overextended. The markets could be overextended longer than you could be buoyant on your position, in a sense that you're not going to get stopped out of your position. You'll be stopped out way before the markets roll over, and you can see it in the price action for the last several years. So please just be aware that have a plan when and if you do decide to short the market. But if you are long, just tighten up the stops. Tighten up the stops. Buy protection. Protection is cheap right now. You don't want to ride. Unless you really want to ride through a 10% correction or more, and it might not even happen. But I like to pay. If I was long, I had a big long book, I would be definitely buying protection. But just let me just show you the analysis here. So we have the spiders. You can see this crazy price action. We sold off yet again, and I also showed you some of the leaders that have now sold off, right? So let's move on, and I want to show you a couple other things here. Gold. There was one of the biggest buyers in gold. This is the gold future now today that I have seen in a long time. Over 182,000 future contracts were purchased. And I think it was one shot was like about 110,000 on one candle. That is very big. That tells me that gold may be forecasting the picture. Now, remember, gold in the longer term picture is in a bear market at the moment. At the moment, we have our 8 and 20 cross, and we're down to the downside. We are still in a bear market. That does not mean gold can't rally for 2 or 3 months and then of course fade, and then gold picks up again in September, October, and they become strong again, seasonal trends. But I just want to show you now, gold is something that we need to watch again. Remember, now gold, you haven't heard me talk about gold for quite some time, only because it was basically kind of out of favor. There was really no true setup, so I'm not going to waste anybody's time on a short video. But now we need to watch what gold does. Remember, it's that safe haven trade, if you will, okay, on gold. Now let's take a look at the XLP, consumer staples, making new highs again. Why is it making new highs if the markets are rallying? Well, it's making new highs because people want to hide and park money until the uneasiness, the possible sell-off. They want to park money somewhere, and that's where they're doing it. Okay, let's take a look at a couple of things. Let's take a look at housing, XHB. Okay, now if you can see here, now I do like the builders and solars and the banks, but I like them for the year, meaning that they'll come in and out of favor, so you need to understand that. But if you see, obviously this is interest sensitive, and it plays a role in what the 10-year does, right? The 10-year. Now let's take a look at the 10-year futures, the ZB. Oh, excuse me, this is the bond, the 30-year bond. Sorry, ZN. And I'll show you the bond in a moment. Now, it has a lot of work to do, no question. But as you can see, when this popped, builders started to move as well as the REITs did, right? Interest-sensitive sectors. They start moving as well. Now, we'll just keep an eye on this. Not that it's a big canary in a coal mine, but it's something that you need to watch. And may I add that the housing data that came out was horrendous. So housing is something that really need to watch. And let me show you something else with housing. Let's take a look at the housing sector with lumber. Now, and here's the RSI, okay, MACD stochastics. Look at lumber. If this is not a leading indicator, lumber dumping, and then all of a sudden the home construction topped while we were making lower lows. And this is the lumber versus the overlay with the ITB index, which is the home construction ETF. This is not good, right? So when you have housing starting to break down, and we had some horrible numbers, we had some manufacturing numbers that were a little slower than expected. That's not good either. Now, I'm not saying, and let me just show you something else here too, the bulky dry index. Now, you probably haven't heard this in a while, and I watch it consistently. But for a lot of analysts, it's not the new way of looking anymore because there's other means and sources that basic materials get transported. That's a lie. I mean, if you want to get basic material to China, you're going to need a boat. And look what's happened to the Baltic Dry Index. It's dumping. It's dumping because there's less products to ship. Okay? This is why we look at the transports, because it's the same thing. This is telling me we have a worldwide slowdown happening. Now, again, this could be very short-lived, but I just want you to be aware of what might be happening here, okay? Let's take a look now at the bonds. Why isn't bonds headed lower? That's another big question. If we rallied for 7 straight days at one point, right? We're up almost 7. Why isn't bonds rallying? Selling off. A big clue. The bond market is smarter than the equity markets by far. Remember that. It's not me. It's exactly what it is. The bond market are smarter than the stock market. And this is telling me that I need some caution. Now, if we start to break down, and we really start to break down hard, then I'll take a reevaluate. Remember, technical analysis, you're always going to need to reevaluate. Things can happen today and change tomorrow. So, but as of right now, things are telling me that things are going to heat up in the next week or so. Look at the Japanese yen, the future, the spot future. Why isn't this selling off if there's a risk-on environment? This is still telling me we're getting closer to the apex. We're sitting on the moving average support, and again, the lower trendline support. This is telling me that we need to be cautious with the uptrend, okay? Again, not saying that it's going to end right away. Big bearish rising wedge on an hourly chart. We were looking at the 60-ish. We blew right through it. Fine, no trade, no trigger, no trade, and now we're starting to roll here a little bit, okay? This is another area where I think that the markets could be vulnerable. We're sitting at the 1272 extension in the ES, okay? Let's take a look at what I want to show you is this. While we're talking about, before we get into the NASDAQ, I wanted to show you a couple of things which would really complement the Qs, and I'll get to that in a minute. Take a look at the IYT. Yesterday morning's video, I said new highs, we sold off, right? This is before this happened today. New highs, sold off. New high, sold off. New high, we really sold off. New high, we sold off, and I can go on and on. New high, sold off. New high, sold off. New high, sold off. So what's the repetitive pattern? New highs, we sell off. This morning, yesterday morning, I said watch for the transports. New high would probably sell off. 139.45 made another new high. We sold off miserably. Now down only 60 cents, but don't forget, we were up at 139.45. We closed at 137.87. Terrible price action. This is the leader, and by far, it leads the other 4 indices, okay? And this is telling me, use caution. Use caution, all right? Let's take a look at the IWM. Do you think this is a great looking chart? I sure don't think so. We have lower volume on the way up. We just caught the 20 and the 50. I'm sorry, the 34 and the 50. We've reversed again miserably from the high at one point, and we now sold off. So again, one of our secondary leaders telling us risk is coming off again. Okay, let's take a look at the Qs. 7 days up, we made new highs. Intraday highs, not new highs, but intraday highs, and boom, we sold off. Bear flag patterns consistently on this downtrend. Now this is literally a broadening top, but as you can see, broadening tops are usually this way, not this way. Okay, so it's not a broadening top, but it's definitely a wide formation of a downtrend channel, and you can see this thing opening and opening. Now this here is catching the upper end of this channel. So when this starts to roll again, now we need to see what happens tomorrow. But I just showed you several of the leaders of the high-flying tech stocks in the Qs. Does that make you want to buy Qs? Of course not. I sure don't want to buy Qs at these levels, and especially up 7 days in a row. Now, let me show you something that's a little disturbing to me. And what I want to show you is the NASDAQ above the 50-day moving average. Does this look like anything that's bullish to you? Absolutely not. Look at this. We were in all of 2013. We hung there. No problem. We stayed well below the zero line, and actually pretty much more across the board, up above 40 percentile, between 40 and 90%. Very bullish, right? One move lower, boom, back up, lower, back up. This does not look, if you look at 2014, this does not look healthy. Lower lows, lower highs, big flush down. I would not be looking to buy anything to do with the technology sector with Qs, at least not right now. It needs to prove itself, okay? Let's just run through the quick charts here and I'll show you a couple more. Lastly would be the euro dollar. Now, obviously, if the dollar runs up, if the dollar really starts to gain momentum, the euro would obviously sell off. It's inversely, right? Obviously, euro dollar. But this here is telling me that the euro wants to go higher. Here's the 1272 extension. I like to look at the currency markets every once in a while. That's why we look at the spot yen. And, of course, we're looking at different currency pairs like the dollar yen as well, which would be correlated with the S&P. So euro dollar here, I'm looking for higher prices. So that means that the dollar might even break down. Okay, one last chart I want to show you is the VIX. Now, the VIX is at its lows here. It's at the lower end of the range. Okay, now, if this flushes one time below, down below 12, and that could happen tomorrow, meaning that equities would rally, I think that's going to produce a buy signal. If not, I think you're at the lows where this VIX could bounce again. All right, so just keep that in mind, guys. That's why I wanted to get this video out early, because I'm seeing a lot of major red flags, not just red flags, momentum indicators. I'm showing asset classes telling me, hey, I think I need to take a break here on the long side. So play the trend. The trend is your friend, but use extreme caution. Reduce your share size. This will all change. This will all come to fruition in the coming days. And if we do sell off, I think it would be healthy for the markets. I think the markets need to sell off. I think the markets could use a 10, 12, 14% correction. I don't think it's going to happen in a day. Obviously, we hope not. But this will be a great, fantastic buying opportunity, especially if you're holding a long book as well as swing traders, okay? So just keep that in mind. Have a great weekend, and I'll give you another big report after tomorrow's analysis. Now, again, just quickly, I'm not telling you guys to short the market. I'm just telling you to be alert and be cautious. And remember, this intraday extreme volatility, you can't get even a position going because it's already reverting back to the downside when you're trying to get long, or vice versa. So just use caution if you're going to trade. Try to trade and pick the best setups if you can, and then manage it accordingly to your trading plan, all right? All right, guys, have a great day. We'll speak to you on Monday. Enjoy the weekend.